Morning, everyone, and welcome to the Early Pay Partnership Series. Today, we are going to be joined by the newly crowned Principal of the Year, Olga Koskie from Tax Assure. And today, we're going to be talking about eating the frog. And I think that's a great time to actually welcome Olga to our partnership series. Olga, welcome back.
Thank you. Thanks, Donelle, and for the kind introduction.
Congratulations, very well deserved. We're certainly all proud of you here, and I'm sure there's plenty of people in your network who think it's also very well deserved. So congratulations.
Thank you.
Olga, we're going to kick straight off because when you and I spoke about this and what we were going to talk about, because it's obviously so topical again now, is that you spoke to me about eating the frog. Now, I went to Google straight away.
Yeah.
To sort of drill down into what that might mean. So to start the webinar, why have you sort of come out with this presentation and this piece of information about eating the frog?
I think we've been talking about for a while, you can't ignore your tax debt, you need to deal with it. And let's face it, no one likes to talk about tax, no one likes to talk about debt. So we thought I'd make it a little bit different, and I do like chocolate. And the concept of eating the frog is that you have to do the thing you don't want to do. But when you actually deal with it and when you find the right help, you feel so much better. So there's often a task in your daily life or to do with work that you put off. And when you finally deal with it and finally fix it or get that help, you feel so much better. So that's where the frog analogy comes in. We're here to help you eat the frog, to feel better. And it is that weight off your shoulders once you deal with it. On the serious side of it, tax debt can't be ignored. And we're going to go through that today. The consequences and the ramifications and where the ATO are at now in very, very active collection mode. It needs to be dealt with. There's just no two ways about it. But I thought a frog was a good way to discuss it.
Absolutely. And before I start hitting you with the really hard questions, I would like to let everyone know that we are really hoping that this session will be very interactive.
Yeah,
so please use the chat function during the webinar. And if we see it in time, we'll ask the questions as we go. Otherwise, we'll save them to the end. And to go along with the Eat the Frog, at the end, everyone who's there, we will be doing a live random draw, and we'll be sending someone out, not a chocolate frog hamper, but an Allen's red and green frog hamper. So if you're still on the webinar at the end, please make sure you stay to see if you're the lucky winner who'll receive the hamper. But in the meantime, let's get into the tough questions, Olga. And the first one, I guess, is, you mentioned that the ATO is scaling up. We spoke about this a few months ago. We knew that it was coming. We'd started to see some DPNs. We'd started to see some more aggressive tactics from the ATO. But on a scale of 1 to 10, how aggressive would you say they're being right now?
I would say they're at the absolute maximum. So it's gloves off. If there is debt, and people will see there's so much in the media around it at the moment. Some people will even have seen the media around there's letters going out and collection letters for 1 and 2 cents debts. So I can go into what they are, but there's no excuses. COVID is no longer an excuse. It can form part of an application. But if you have an outstanding debt, I don't think it's a matter of if there's recovery action against you, it's a matter of when and what that recovery action will be, and that you need to be proactive to prevent that from happening.
So, and what's the reason behind this heightened sort of enforcement right now? I mean, we're leading into Christmas. Typically, historically, we've always seen a little bit of a quietened or a less heightened time from the ATO as you sort of head into Christmas. What is this focus for and why?
I think it's a number of reasons. So there was actually a statement issued by the Deputy Commissioner saying that they are now back in active collection mode, and that is around the level of debt. So at the moment, there's a reported 54 billion in outstanding debt. Now, when it's reported, that includes lodgements. So there's probably even more debt around. So because of that, and it's a cycle, and because during COVID, the ATO weren't collecting. Obviously, they weren't enforcing that debt, but the book has grown so big that we're now seeing a complete shift. I don't know the answer to why it isn't a build-up. So, for example, interest rates have been slowly increasing. However, what we've seen, which makes it even more difficult for businesses with tax debt, is we had it's okay, we're willing to work with you, bang, everything is due and payable and must be paid now. And that's their internal direction from what we understand too about absolute collection mode. I might be jumping ahead, but I'll just talk a little bit about what the ATO see as compliance. So to be compliant, you don't have to have paid your debt in full, but you need to be in a payment arrangement. And the ATO's KPIs and systems work around that, what they call compliance. And so for them, a lot of the KPIs are to move a matter within 28 days. So if a matter goes onto someone's desk, it either needs to be compliant, which means in a payment arrangement or paid in full, or go to the next collection step, which could be a director penalty notice, which could be a wind-up, which could be legal. And so we're seeing that very quick turnaround and a lot of automation between moving them to the next step, whether that means compliant or whether that means active recovery.
And one of the things that I've heard from some of the brokers in our network, Olga, is that, you know, that sort of, you know, missing one payment here, you know, you've made 11 or 12 payments in your arrangement that you've made, and then you miss one payment, that's actually triggering that next cycle in recovery action. Have you seen much of that, or can you comment on that?
Yeah, absolutely. So both if one payment's missed, but also if an ongoing obligation. So even if you're paying your payment arrangement, but you miss your next BAS, then that will default the whole payment arrangement. The other thing that we're also seeing, which is different to the past, is people would say, wouldn't realise that they've defaulted a payment arrangement. By that, they would pay their BAS a little bit late, and then they would just keep paying what they thought was their payment arrangement. Now, that's considered a voluntary payment. And in the past, if you just kept paying that and you made up your BAS, you wouldn't see legal recovery action. However, what we're seeing at the moment is that voluntary payments are not enough to stop legal action. So a lot of the recovery action that we're seeing is automated, and the computer doesn't read the notes, and the computer doesn't see that those payments are still being made. What the computer sees is that the arrangement has defaulted. You're no longer in a compliant position. So therefore, they're escalating immediately to the next step, which often includes a director penalty notice, garnishee notices, and all the other things that we're going to go through.
Okay. And if you're in that situation where, you know, you are under an arrangement, you know, you're paying your arrangement, you've paid your BAS on time, and you realise, and there's an event in the business, which we all know. Is this again about eating the frog and not assuming because you've been regular with your payments and your arrangement that you need to pick up the phone and let the ATO know that absolutely. You are needing to miss a payment?
And often, even if you're needing to miss a payment, it depends on when that payment's going to be made up, but you may need to then renegotiate to get into a new payment arrangement. So the position that they're at now, depending on the timing of that missed payment, what the missed payment is, it may still default the arrangement. And again, you've got to eat the frog and get back into another arrangement.
Okay. So who's at risk at the moment of being pursued by the ATO?
I describe it a little bit like a wheel of fortune. I would say anyone that has an outstanding debt that isn't in a compliant payment arrangement. So most under 100,000, we're not seeing a lot of recovery action, but anything above 100, we're absolutely seeing a myriad of recovery action. The other thing that's a factor is not just the amount. So the amounts are a factor, but it is also a factor on the compliance of a company. So you might have a smaller debt, but if you've always lodged late, or you've always paid late, or you've got a number of defaulted payments, or you've got that history, compliance and the history of non-compliance is a huge factor that the ATO are looking at the moment.
Okay. And I mean, we spoke about some of the criteria or triggers, which is, breaking an arrangement, not lodging your BAS on time. Are there any other sort of criteria or triggers that are going to put an individual or a business at risk?
So for breaking an arrangement?
Yeah.
So any ongoings. So businesses that all of their ongoing liabilities. So that might be their IAS, it could be a BAS, it could be an end of year return, depending on what each business or even an individual's personal liabilities that are specific to that business. That's what have to be lodged and paid on time to stay in a compliant payment arrangement.
Sure. And we've got a question already, which is around, having an arrangement before, lodging things on time, but then ending up with another reasonably hefty tax debt. I'm sort of paraphrasing here.
Yeah.
And that you used to then be able to create a new arrangement for both debts. So do you know whether you're seeing that happening or whether they've been quite firm on ensuring they're very separate?
So you would have to create a new arrangement for that. So the old one would either be cancelled or would default, and then an application would need to be made for a new arrangement. But what we are seeing is that it does need to be an application. So it's not just a phone call. I've got a BAS. Can I roll it in? Can I go back on my old arrangement? And we just keep going. A new application would need to be made that demonstrates the ongoing viability of a business, because one of the factors the ATO would consider in that scenario is if you can't pay your BAS and you can't pay your ongoing liability, why are you still viable and why should we let you keep trading?
Yeah, absolutely. And Vincent's just asked a great question, which we're going to tackle next. So Vincent, hopefully we asked that for you. Robert's asked a question though, Olga, which is if it's an auto process to a degree, what's the difference between this and say robo-debt?
Yeah, that's an interesting question that I think we'll leave to see what the crystal ball shows, but that has been raised a number of times.
It has, yeah. Okay, so there you go, Robert. I think it's certainly been flagged, but at this stage it appears as though there's not a lot of other information we know. It's definitely a watch this space, unfortunately.
Yeah, absolutely.
Kim's just also reached out and said, are there reasons that seem to work during the conversation to get a new payment plan approved?
I suppose that's the secret herbs and spices, and it's why we have a job. So it's not always just a phone call. So I had that conversation as well yesterday with 2 clients. So our applications are usually between 10 and 15 pages long, and the conversations and the factors that need to be had need to match what's in the ATO's legal practice requirements. So there's legal factors that have to be addressed. Now, when those factors are addressed in regards to each specific client, it is not a one-size-fits-all. And depending on the client, depending on the circumstances, and depending on the ATO's legal practice requirements, that's what needs to be put in an application. But that would rarely be a phone call.
Yeah. And I guess that's what you're saying. They're really looking at applications now, as opposed to being able to ring up and negotiate this yourself. So I think that, that highlights the need for, yourselves and other businesses like yours. They're becoming even more important to clients because they're not going to be able to negotiate this stuff on their own.
And the smaller debts, like people say to me, oh yeah, but we just get it over the phone. I'm not doubting the smaller debts or where there has been a very good compliance history, then yes, those absolutely you can still get over the phone. I'm talking about the ones that have had, which is where we usually get involved, where there's been non-compliance, they're larger debts. And in those cases, it wouldn't be over the phone. But if I had to pinpoint the 2 factors that the ATO are very concerned about at the moment, it's the compliance piece, which is what we've talked about paying the ongoings as and when they fall due, staying up to date with payment plans if that's the case, and also ongoing viability, which again, it's for the debt to be coming down, not going up, not increasing. Ongoing viability is also demonstrated by however many plans have been defaulted and however many lodgements haven't been paid. So they're probably the 2 main things that the ATO are also focusing on at the moment.
Well, Tio's also asked us around, can accountants strike a deal with the ATO to pay out the debt in a lump sum and then receive a discount on the original debt?
No. So core debt can't be discounted. So the way and we'll come to this, but I can address it now. So the only way you can discount, if you, for want of a better word, an overall tax debt is by looking at the interest and penalties. And so the interest rate at the moment with the ATO is 11.15% compounded daily. So the interest does add up very quickly and increases that debt by a huge amount. But you can't do a deal, so to speak. So it's not a matter of saying, well, I'll pay this if you give me this off, or if I pay the whole debt, can you just wipe the interest and penalties? So to get rid of the interest and penalties, it's the same as I was talking about for a payment arrangement. So there are legal practice requirements, there are applications, and it is not a given that even if you pay the core debt out in full in a lump sum, that you will automatically be given the interest and penalties wiped off. The ATO consider the whole thing as the debt. They don't differentiate between the two, and an application needs to be made with all the relevant factors in that regard.
Yeah, perfect. And again, for everyone that's on today, I think the key here is about, the size of the debt, the amount of compliance, lack of, sometimes also are two really key drivers here, and that word application is about really negotiating and working with a professional, to help you with any recovery action that, you or your clients might be under.
And when we talk about negotiation, it's not like a negotiation with a normal creditor. So we use the word, I suppose, negotiation broadly. It's more working within the ATO's parameters, again, these legal practice requirements of what they're allowed to consider and what they're not. So it's not necessarily a discretionary matter to wipe core debt, as we said, but they have parameters about what they're allowed to accept and what they're not allowed to accept and what those factors are. So it's a matter of the application. And yes, an accountant could prepare that application as long as they're answering all of those factors and meeting the requirements. I suppose the difference of what I always say is when that's all we do and it's a specialist application, it's a bit different. I wouldn't know how to lodge a BAS. I don't do any compliance. I wouldn't even try. But that's sort of how the difference works.
Sure. And we've got another one here, which is, could an approach be to pay in full the existing ICA or the integrated client account balance and then try to negotiate the payment plan for the next BAS?
Yep. That would absolutely work, because that is still a payment arrangement. So that's almost doing exactly the same thing, because what you're doing is a negotiating a payment arrangement for the outstanding debt.
Okay. And what happens, Kim said, when they don't agree to remove
Yep.
the interest and penalty fees?
Yep.
They've helped a few clients to sort debts with the ATO, and so far all the interest and penalties have been getting removed. So again, is this about the quality of the client, the amount of compliance they've had in the past? What is that reason why you would get it sort of? Is there I guess a profile of what a client looks like that may be able to get those charges removed?
So there's a number of factors. So those are some factors, but there are also factors around what's occurred and what would go in an application, again, that meets the legal practice requirements for that particular client as to why the circumstances occurred. So to get the interest and penalties removed and reduce the debt, it's called a remission. So you're not denying that they should have been there. You're doing an application for them now to be removed based on very specialist factors for that specific client. So it wouldn't be a one size fits all. It's why should this client fit within the ATO's remission requirements to be eligible for that interest and penalties to be remitted, which effectively means removed.
Yeah, okay. Now, I guess this question is obviously promoting a lot. So I'm going to ask these as we're sort of in this question.
Yeah.
What do you mean by applications? So previously they've simply had chats on the phone or message through the business portal. Yep. What does an application look like?
So that's what we draft. So everyone, I'm assuming that does this sort of work would have it looking a bit different. For us, it's when I talk about an application, it's a written application that meets both the legal practice requirements and ties that with the client's circumstances. So under 100,000, we don't do this, but accountants can log on to the portal and put their information into the portal. We don't access the portal. So the way we work, and again, that word negotiations that we have with the ATO, are written submissions effectively. And I can't believe I'm saying this, but we fax them. We still fax them to the ATO.
Really?
Yep. There's a fax line that we submit our applications through. So it's a different process in how we go about submitting these applications.
Wow, that's mind-blowing.
And then there are conversations when there's case officers, there's emails as well. Often it's a combination of all of those three things, depending on the debt and the client.
And you've spoken too about sort of the validity and the strength of the business moving forward is quite important in that application process. Is that right?
Yeah, and that's something we're really seeing that's very different as well. So even where people say, well, I had a client that said, oh, well, if I pay you yesterday, can you get me an arrangement tomorrow? And they had a $2.5 million debt. That's not going to happen. So there's going to need to be a whole heap of supporting documentation around why that client is viable. And that's not just a 5-minute phone call, as to the ongoing viability. And again, different things will need to be demonstrated depending on the client's non-compliance, depending how long they've had the debt, how big the debt is, how many defaults, all the different factors. So it's very much not, and at the moment even more, a one size fits all. So I sound a bit like a broken record, but it is necessary to look at every client, what their situation is, what trouble they're in, and what they need. And then also, I think the bigger picture too, like their business. So for example, if early pay get involved with debtor funding, that's a factor that the ATO would consider in relation to the ongoing viability of a business and what's changed and what's helping them move forward to still be a viable business if they didn't even know there was that option. And so there is a lot of factors around the actual business and what might, whether a CFO's changed or a CEO's changed or they've borrowed or all of those things also come into play in demonstrating the ongoing viability of a business.
Excellent. A great question from Andre, and maybe this is where the title comes from, but when does an application get done? When you're negotiating the plan, once you've paid it in full, when you're looking to recoup, when's the best time,
to reduce the debt or to get...
Andre's just basically said, when does the application get done? When negotiating the plan or once it's paid in full?
Most of our work is negotiating a plan. And when you're looking at interest and penalties, we don't wait for it to be paid in full. So we would do an application to get rid of the interest and penalties much earlier than paid in full. So it used to be parallel applications where we would get rid of the interest and penalties immediately, as well as get the client into an arrangement. So you're negotiating an arrangement on the lower amount. But again, when we come back to that compliance piece, the ATO are now needing to see 2 or 3 months of compliance before that they'll look at the remission of the interest and penalties. But we work closely with both of those. We don't wait for it to be paid out in full.
Okay. And if it was, to get interest and penalties remitted because you've already paid the debt in full, that's an application possible as well, correct?
Yep, that's all completely possible, yeah. Yep. And even if it was a discussion over the phone, these factors still have to be covered off. So that's almost like a verbal submission. So the factors we're talking about, it's not just, hi, Mrs. ATO, hope you're having a nice day. Can I please have the interest and penalties back? That's not going to happen. It is the factors that would go into an application and would go into submission as to why that client is entitled for that action to happen.
Yeah, absolutely. And if the client can't show ongoing viability, but they're looking at ways to fund the ATO debt, so, they're selling their business or they're looking to obtain some financing, is that something that would allow the ATO then to consider a payment plan or an extension?
It depends what the extension is for. So the problem at the moment is this recovery action. So if there is no plan in place, We have seen instances with those things happening where accountants have got notes put on the file, but as I said, the computer is not always reading the notes. So we have seen a few credit reporting notices go out, even though the client was in the process of trying to get finance and had told the ATO that. So I think the most important thing and message, again, eat the frog. So if you are in the process of getting finance, that you even consider an interim payment arrangement. So something that gets you out of the enforcement pile and into the compliant pile. I've seen a number of clients going, but I'm getting finance in 3 months, so I don't want to deal with it now. I don't want a payment arrangement now. It'll all be okay. I'll just wait. We've seen that it's not okay. I've had one client who I spoke to and said that they were looking at an investor. They were going to get some funding from an investor. They didn't want to pay us. They didn't want to engage us. And they wanted to wait 6 weeks to get the funding from this particular investor. They hadn't really heard anything from the ATO. They had about 1.2 million debt, so they just left it. 4 weeks after I spoke to them, so 2 weeks before this investor was coming through with the money, they received a statutory demand. Now that popped them into a different level with different criteria, with different arrangements, with different things that we were able to help with. Now, if they had jumped in early and got into a payment plan, even while they were waiting for the investor, to protect their position, to hold their position until that funding comes, then it would have absolutely saved them.
Yeah. Is the voluntary sort of sale of property considered as a valid proposal?
So there would need to be, if depending on, again, where they're at this in the scale of recovery, there may need to be evidence around that. And then when we're talking about a hold, what would put them in a protected position between now and the sale of that property? Because at the moment we're seeing just a note on the file is not going to protect their position between that happening. And if a credit reporting notice does come out and they get reported to a credit reporting bureau, which can happen if your debt is more than 100,000 and more than 90 days overdue, that's going to affect your funding and it's going to affect your borrowing. So you have to be protected even in that interim space. Now this is a different message than what I would have said if you asked me that question 6 months ago. 6 months ago, you could get an undertaking, you could get a hold. 12 months ago, absolutely, these notes on a file would be considered by the ATO and would be read before any action was taken. But at the moment, that's not happening.
Yeah, sure. We've got 2 more, and then team, I will move on. We've only got a couple of questions to go, but I'll move on after these 2, and then anything else we can address at the end. But it's interesting, and I'll let you answer this one. But Kim, no, Early Pay is not a tax agent or a financial advisor. But Kim was just interested around, what the credential is there to be able to assess and explain to the ATO in an application business viability and compliance assessment. Now,
so we don't provide the tax advice either. So there are tools on the ATO's website that specifically outline what needs to be provided. One of the things is a BVAT at the moment, and it goes through all of that on the website. But yeah, that's probably a bit too detailed to talk about in
absolutely.
the webinar.
And look, Kim, very quickly, and I'll touch on this, certainly from our type of funding perspective as a funder of SMEs, debtor finance is actually all about the viability of the client and their debtors. So that speaks to a strong business with a strong work pipeline coming in. If you have any debtor financier looking to take that client on, it means that they have really strong future contracts of work and really strong invoices that are being raised by clients. So that, to me, would be the only thing that would help possibly support the viability of the business moving forward, is that would demonstrate that there is a very good, strong set of clients and income coming in moving forward. Corey has asked at what point, and this sort of covers the last 2 questions in this section, which is about, when and where do the ATO mark a client's credit file?
So yeah, and any time at all. So they have to send it to a credit reporting agency, and that's any time after the debt is 90 days overdue and more than 100,000.
Yeah, perfect. And obviously, commercial, that will trickle through to then individual, lodged on individual reports as well.
Yeah, absolutely. And they don't. So sometimes you'll get a warning, but you don't have to get a warning. So some people say, I haven't had a warning, so it'll all be okay. I don't think you can rely upon waiting for a warning before that's actioned. We're also seeing some of the warning letters and even some of the credit reporting letters being sent by a snail mail. So you might not ever receive the warning letter before it's actually reported.
Wow. Okay, so question 3. We stayed in question 3 for a while, which is
That's
great.
okay.
That's why we do these, right? Is
yeah,
to,
absolutely.
help spread your wisdom and knowledge, and clearly it's thought provoking today. Hey, we talked about enforcement methods, and we briefly touched on them because we knew we were going to address it towards the end of the webinar. But we know we've just had a rate rise. We're predicted to possibly have another one. What happens in the case of the family home? What's at risk there if our business owners don't eat the frog? What's the risk to the family home?
So it can potentially flow all the way down. So the ATO are issuing, and there's a whole heap of parts to this. So if you have a company that has a debt, there are certain parts of the company debt that you can become personally liable for. Again, there's different factors of when that comes up, but that can include GST, super, and PAYG. So people will automatically think, as a company debt, my house is safe, everything's okay. Now, that's not always the case. So if lodgements aren't on time and different things happen, that portion of the debt you can become personally liable for. The ATO, we're seeing automatically issued director penalty notices. So again, that's been all through the media, how many thousands are being issued per week. And what we're seeing is that the ATO are using director penalty notices as almost their first choice rather than statutory demands against the company. So they're actually going after the personal liability of a director. If you were to ignore that, not enter into a payment plan, the company was to not pay the debt and you were to not pay the debt, the company could then, the ATO could then enforce what you owe as part of the director penalty notice. And then your house, as that process goes down the line, your house can become at risk because you're personally liable. Now, I know a lot of people will say, well, I'm structured and the house is in the wife's name. I'm not here to provide advice on that. But there is issues where it is a company debt that you then become personally liable for. And a director penalty notice, as I said, is a major tool that they're using at the moment, which can lead to that.
Yeah. It's pretty scary. And I think, certainly in previous years, going after personal property, has sort of almost been the last resort, but we're hearing it a lot more. And obviously that's what's raising the question too in the chat about that in particular.
Yep.
We spoke about, the recovery process in bits and pieces, but I think it's really important to maybe understand how quickly, I know you mentioned the 28 days, but what does the recovery process look like, and where, how long, what's that staged approach? How does that present to a business owner?
Yeah, so the ATO don't have specific timeframes. So if you default on a payment plan or you have an outstanding debt, there is no specific documented timeframe in which a recovery action might happen. So we've seen payment plans default and director penalty notices issued the next week. And the same has happened with payment plans that have defaulted and statutory demands being issued immediately. So it's not at the moment necessarily a case of the debt has to sit there for 6 months before there's a formal recovery action. The other thing with recovery action is there isn't necessarily a flow chart. I call it a bit like a wheel of fortune. The ATO have a number of tools in their belt, and they can use any of them in any flowchart way. So some of those include a garnish sheet, some include a director penalty notice, a statutory demand to wind up the company. Now, all of those could be used, and credit reporting. So all of those can be used interchangeably at any time. And then the time frames start because they're all legal documents and legal notices, the timeframes start from when they're issued. But up until they're issued, you could literally get them issued the day after an arrangement has defaulted. It's normally about a week, but we're seeing it happen very quickly. For matters that have large debt, that they have been trying to get into an arrangement that haven't, or that they haven't been in arrangement at all, but it's a significant debt with non-compliance. We're seeing sometimes when an application has been put in by another party and then denied, we're seeing the next stage happening in under a week, because the case officer is progressing it immediately to the next stage after that application's been refused.
Wow. Have you seen an increase in, you know, company and director personal bank account garnishes increase?
Yep. So we've absolutely seen an increase. We've seen some too where people had no idea, because it's some of these director penalty notices, and I've seen a couple of the garnishee notices. I know it shouldn't happen. I don't know how, but it does. They're going into MyGov accounts. Often an accountant doesn't have access or look at a MyGov account. Most directors, I don't hardly go into my MyGov account. You don't access it. So sometimes they're hiding in there and you don't even know they happened. Or sometimes someone will contact us because they need help. We'll ask the question and they'll say, no, I haven't got that. And when we do a detailed review, we actually see that garnishee notices have gone out. But sometimes they've gone to old bank accounts, sometimes they've gone to empty bank accounts, and so they haven't actually been actioned. But we're absolutely seeing an increase. But the biggest increase by far is director penalty notices, which is making directors personally liable. And the credit reporting letters are huge.
Yeah, okay. We've got a question here from Tony around, you know, and do tax assure, can you negotiate post DPN issuement?
Yep. Okay. Yeah, absolutely. So we will negotiate all the way up until you're in the wind up list. So even with the statutory demand, depending on the circumstances, it's harder, and different factors need to be taken into account. But definitely with a director penalty notice, either live or expired, we can still negotiate arrangements which will stop, doesn't get rid of the director penalty notice. Once it's issued, it's out there, it's done, but it will stop further enforcement action, which is the whole message around eating the frog. You need to take the action to stop any further enforcement action or collection action, because once you're in arrangement, you're protected again from further action.
And on that, Olga, are they, you know, when you're wanting to make an arrangement, I know we're typically talking about, you know, plus 100K.
Yep.
Do business owners have the ability to, I guess, stage not only their payments that they're going to make, but also are they allowed to start prepaying in advance? Now, I know we talk about ICA and ITA, but I'm talking about in advance.
Yep.
Are there options with the ATO now to be able to set that up?
No. So this is another nuance that really catches people too. So if you're in a payment arrangement, the payment towards the payment arrangement needs to be made within 3 days of the due date.
Right.
When you lodge or get a BAS, you need to use the specific payment reference number, the PRN, and pay the PRN for that BAS. Now, if you make the payment for your payment arrangement too early, it's then considered an additional voluntary payment, and it doesn't go through. Let's use the 1st of March. So if your $8,000 was due on the 1st of March and you paid that on the 10th of February, that won't go towards your 1st of March payment. That will just be considered an additional voluntary payment. So if you don't pay your 1st of March arrangement payment of $8,000, that arrangement will default, even though you are arguably in credit. So the bureaucracy and the risk of the defaults around this is huge, and understanding what needs to be put into place. So one of the other things is the ATO when people try and get these arrangements themselves. So people say to me, can't anyone do it? Well, anyone can, but it's what quality of an arrangement you get. So for example, we've had a number of people come to us. I'll use the $8,000 that they had to pay $8,000 a week. The ATO, if you directly talk to them's preference is weekly payments. I hate weekly payments because that only gives you 1 week to catch up. So if someone doesn't pay you and something goes wrong in that 1 week, you're stuffed. Whereas what we will always put you on a monthly payment arrangement, and often in that situation, once we get in, we'll do $8,000 a month rather than $8,000 a week. But the nuances around making those payments when they have to be made in the arrangements, and to make it in advance, the ATO systems don't really allow for that. So that would need to more be personal accounting about different bank accounts or setting money aside, or how all of that is monitored. But it does need to be managed very, very carefully.
Sure. And how long are the ATO, in time of a term? How long are we seeing, that arrangement for debt to be paid off? Because often we say, even in personal finances, when you're teaching financial literacy, only state what you can afford to pay.
Yep.
And so how are the timelines sitting with the ATO at the moment?
So we're depending again on all those factors we've talked about. So viability, compliance, and history. So history is actually a huge factor. So often when I'm talking to accountants or other professionals, they'll say, well, we call the ATO. If they don't give us the arrangement we want over the phone, we hang up and we call back again. And sometimes we do that. People tell me they do that 4 or 5 times a day. What that does, each time you get a no, it puts 5 refused plans on someone's portal in their notes. So if we then come in at the 6th time, we're not going to get as good an arrangement because they've already got 5 refusals on their file. So the arrangements we're seeing anywhere from 2 to 3 years, depending on those factors like viability, compliance, and history. But that history and that compliance history is so important, that these calls where you're calling and hanging up are doing such a disservice to the clients at the moment, because they're upping risk ratings and they're putting them in a different category, which is then more difficult to get than the longer arrangement.
Wow. What's the last step that they take? That's a question we've had. What's the last step the ATO take?
Well, they issue either wind-up proceedings or bankruptcy proceedings. So I had one 2 weeks ago with a really, really distressed person, and he didn't even know that he had 4.5 million, and bankruptcy proceedings had been issued. So that means there's been a lot of frogs that just have been buried in the garden before that he's got, because the bankruptcy proceedings and the wind-up proceedings. And then if nothing happens, then they wind your company up and you go into the wind-up list, and the company liquidator gets appointed. That would be the last step for a company. And bankruptcy would be a bankruptcy order, and then they proceed on judgment.
Absolutely.
And we do see that. It's not a matter of that not happening. It's not really publicised, and there's never a lot of media around that. But behind the scenes, that absolutely is happening.
Paul's taken my last question, so I'll save it till last. It was in the back of my mind, and he's just popped it in the chat. So I will go there, Paul, I promise. I've just got one more question for Olga. But yeah, you make a very valid point. Olga, before we finish up with the last question and address what's in the chat, how can someone reduce their tax debt?
So they won't reduce core debt. It's the law. The only way to get rid of the core debt is an event of insolvency. So, and today's not the day, and we don't do it. So I'm not the expert, but many people on the webinar will have heard of a small business restructure. So if you go through, that's an event of insolvency. So if you go through a small business restructure, that is a way to reduce your core debt. A liquidation is a way to reduce or get rid of the debt. Bankruptcy is a way. The ATO do something else, which I'll touch on, which is quite technical, and it's called a non-pursuit. So if they deem, and this is what I don't know, people may have seen all the media around the 1 and 2 and 5 cent debt letters that are being sent out at the moment. If they deem a debt is non-economical to pursue for whatever reason, the ATO call it written off, but it sits behind, I call it a curtain. And that's only if you're not lodging returns or earning any income. Now, as soon as you earn any income, that debt that was sitting behind the curtain pops back, surprise, with interest and penalties for all the years that it sat behind the curtain. So there is no way to get rid of core debt. Again, there's one other thing called a hardship application. I've only ever seen a hardship application work once. It was an 85-year-old dying with no assets. It is extremely difficult, other than an event of insolvency, to get core debt written off.
Wow. Okay.
Just doesn't go away.
Have we received any timeframes on when the on-hold debts are becoming payable? That's obviously one trigger.
The ones that are behind the curtain, you mean, or just debts that are on hold?
Just debts that are on hold in general.
I haven't seen any debts on hold. So if you are not in an arrangement and you have outstanding tax debt, the ATO's view is that it is all due, including interest and penalties, immediately.
Okay. All right. Now the chat function is going crazy, and we've got a couple of questions here. Paul, hilarious. I agree. Good question. Is there any positive news, Olga? I love that we've started like a Tuesday morning with.
Yeah. So the positive news is there's people that can help. And that's what we're here for. Not that I'm here to plug us. But the positive news is that there is, if you do eat the frog and you do deal with it, there are ways with the correct application and the correct help, if it's a viable business, to get you a payment arrangement that meets your cash flow, meets your criteria, and what you need to continue on as a business. And that's why they need to be bespoke applications to get you that breathing space so that you can absolutely get on with running your business. And it's why we have a business, because that's what we're able to provide and what we offer.
Absolutely. And are you finding that when, businesses are using professionals like yourselves, that you are able to achieve better outcomes?
Yep, absolutely. So it's very rare we won't achieve an outcome. An example of where it's extremely difficult, often we've got clients into a provisional payment arrangement. I've got a client at the moment that we had 2 payment arrangements that were escalated for approval, and then they paid their BAS late. Now, if whilst that application was about to be approved, their accountant hadn't been able to get it for them, we had got it over the line, but they paid late. But if you can pay your ongoings on time, there is that cash flow and there is a viability. It's rare we can't help.
Yeah, okay. That makes sense. And, from an early pay point of view, Corey's just said, can early pay, how do we view a debt restructure with the ATO? So I think, Corey, the easiest answer there is, if the client's looking to restructure, it's really important that for us, we understand the situation as fully as possible. We need to ensure that the plan is being undertaken correctly, that there's no potential for any illegal activity. I guess it really depends too on the context. So, for example, if there is a proposed restructure or a DOCA, then early pay, certainly are able to support in terms of providing ongoing finance against the receivables. But if these restructures involve the ATO as a creditor, then that is not generally an issue, provided with the above is sort of followed. So, yeah, I think that, again, for us, it's really about understanding. Certainly, invoice and debtor finance is very transformational and not a transactional product. So it really is about understanding the type of restructure, as in-depth as possible. So, the answer to that, Corey, is yes, we can consider those. It's just about understanding the situation. Olga, great question. When should an accountant engage tax assure services for their clients?
Wow. In the most selfish way to make our life a bit easier, straight away. Not before 5 defaults, please. So, yeah, in all seriousness, once that debt is on the port, once the lodgements have been made and the debt has crystallised, that's the ultimate time for us to get involved.
Yeah, sure. Any idea on the current foreclosure percentages?
No, I don't know.
Yeah.
But I do watch the wind-up list, and it's certainly growing every day, and the ATO have a significant presence back in the wind-up list.
Yeah, Robert, that's actually a great question, and I'll see if I can track down any
Yeah, I
stats
don't
for
know
you
that.
and,
Yeah, I don't know
and
many
shoot
of
it through to you. So our team that are on there, if someone's already starting to do the Google, then please do. But otherwise, Robert, great question, and we'll try and get you some info on that as well. Kim, what's the time frame or number of repayments the ATO is looking at liking? You know, previous it was 3 years or 90 max repayments. Has that changed?
I'm not sure exactly. Do you mean the term of an arrangement?
Yeah.
Yeah, so I don't know what the maximum payment amounts, but depending on all the viability and the compliance, it's between 2 and 3 years. Unless, of course, once you get to statutory demand stage, the landscape changes, wind up bankruptcy, the landscape changes.
Okay. So, Olga, before we, wrap up today and I sort of, summarise what we've learnt today, because I love chatting with you. I mean, this is such a scary topic for a lot. Historically, it's been a boring topic, which we all know now it shouldn't be a boring topic.
That's why we have our frogs.
Exactly. And so I love talking to you about it because, it's very, you make it real, for people to understand. So for our brokers, partners, referrers that are on here today, if you're going to leave them with, 2 or 3 tips, what would you leave them with today?
So the first one is eat the frog. Just do it. And if you don't want to, that's why experts exist. Talking to the ATO is not fun. It is scary. And that's put someone in between yourself and the ATO. There are solutions. There are solutions that are not cookie cutter solutions. There are solutions that are not just divide the debt by 2 years, pay 30% upfront and hope for the best. None of my arrangements would ever look like that. So do reach out and get help from specialists. The same as lending. You wouldn't go to NAB for a product that ElliPay can provide. So it's horses for courses. So there's absolutely the solution there. And that now, if there are people on the call that are just hoping to call up, if you don't get what you want, hang up and do it again. Please don't. It is impacting clients, it's impacting their risk ratings, and it's impacting the ability to then get an arrangement down the track. Because we are in a different landscape. It is not what it was 6 months ago. It is almost changing fortnightly as to what the ATO will consider, and there are real consequences for ignoring the debt.
Yeah, sure. We did just have a last question come in, and
Yep.
funnily enough, we didn't actually get asked this the first time. So we've clearly provoked a bit of thought today, because the question is, how do the tax assure fees work?
So the easiest way to describe it is it's in 3 components. The first component is free, and we do a detailed review. Now, the reason we do that detailed review is for what I've been going on about the whole time. Every matter is different. We need to look at the background compliance. We need to look at the history. We need to look at the risk rating. We need to look to see how close it is to legal and effectively scope the amount of work that's involved.
Yeah, sure.
The second step is a fixed upfront fee for the work to get them into a payment arrangement, which is based on that review. And the third component is a success fee when we're able to reduce the interest and penalties when that occurs.
Perfect. Thank you very much. So in wrapping up today, clearly it's so important, and we talk about, burying your head in the sand is another analogy we use, in our personal lives as well. And eating the frog, Google it, Mark Twain. It's very interesting when you read some stories and snippets on where this analogy has been used over a very, very long time in our history. So, certainly for us, we recommend our brokers, when you're talking to clients and that, they've either been issued a DPN, don't wait. Solving with a lending product is not always the answer here. It's really about being able to understand the viability of that business moving forward, and that, negotiating and spending time and money and resources with a company like Tax Assure to negotiate a plan is much better than necessarily putting further hardcore debt on your balance sheet to try and pay another one.
Yeah, and a DPN is not the end of a line. Even a credit reporting is not the end of the line. There is still absolutely things that can be done, but it's a bit harder.
Olga, I think before we sign off, we're going to share the screen and do our little random
do our
draw.
raffle.
Yes, to see who's going to win
Who's
our
going to win the
Allen's
frog?
Red
I know,
Frog
I'm
hamper.
excited.
So here we go. Let's have a look. We've got Estelle in the background. She's going to generate our winner right now. And we'll hit the start button. And who is it going to be? Renee Law, you are the winner of the Allen's Frog Hamper. If you wouldn't mind just staying on this webinar just for 2 seconds so we can grab your details and make sure we get that to you very quickly. But otherwise, Olga, you know, we've got lots of comments coming through in the chat now just about, you know, what great work you do, you know, how people have worked with you previously in the past and they really recommend what you're doing. Yes, good luck. Well done, Renee. There's lots of people saying, I hear Renee. Me too. I was hoping, you know, as the host that my name might have been in that generator as well. But Olga, we really appreciate you, you know, spending time to help educate our network and yours on the ATO and how they're working in this current business environment of ours. Really appreciate your time. Again, congratulations on your award. Thank you all very much for joining us for the Early Pay Partnership Series with Olga Koskie, Tax Assure. Thanks, everyone. Enjoy Tuesday.
Donelle.
Bye.